please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now let's get straight to talking about Fortis. Manipal-TPG has revised their bid for Fortis. They have proposed a full merger of Fortis and Manipal, and also they have included an upfront payment. Nisha Podar told us to watch for it over the weekend, and that's precisely what happened. Good morning, Nisha. Fill us in with more details.
Good morning, Nigel. So they have exercised their right to revise the bid, but they have not changed the valuation. Valuation for Fortis Healthcare as per Manipal-TPG bid still remains at 160 rupees per share, which is the lowest compared to the all four bids which have come in. But it is now changed in terms of the structure. They have taken feedback from the shareholders and they've changed the structure to full merger of Fortis Healthcare rather than a slump sale kind of a scenario where they would just take the hospital business and merge with Manipal. So now the structure will look like Manipal Hospitals merging with Fortis Healthcare, the listed entity. They've also included 2,100 crore rupees as the upfront payment. So in terms of upfront payment to meet the liquidity requirements of Fortis Healthcare while the merger process goes on is highest amongst all the bidders. So there are various counts on which they have upped the bid, but valuation-wise, it still remains 160 rupees per share. But remember, they are the only ones who have completed the due diligence and refusing to budge above 160 rupees per share in terms of valuation. So this particular race is really hotting up. And on May 10th is when the board is going to finally decide after taking an opinion from the external committee.
Right, Nisha, thanks so much for joining in and giving us those details. Well, we are at CNBC TV18. We're going to be on top of that with Nisha as well as Ekta. But Ekta, let's come across to you on Wockhardt. How about the numbers? I mean, on a year-on-year basis, they look better, but your understanding?
Well, I expect more of the same for Wockhardt in terms of trade today. I expect the stock to actually, be a little bit in the red as well as probably in the green, a mixed reaction simply because the revenue growth was 18% on a year-on-year basis. So the numbers look good on the top line. But if you came down to the EBITDA level, that too reduced. However, the net loss continued to be high. It was at around 154 odd crores versus 174 crores year-on-year. And that's because the finance costs continue to be elevated for Wockhardt. Plus, they had R&D expenditure, which was around 7% of total sales for them. The company is still not very clear about how each market grew. So they have said that emerging markets was very strong this quarter on a year-on-year basis. US markets was up around 13% because of some new product launches. Remember that the US FTA issues continue for Wockhardt. So overall, yes, it was a better set of numbers on the revenue as well as on the EBITDA on a year-on-year basis. But if you're talking about profitability, the losses continued at this point for Wockhardt. And they have approved fundraising, interestingly, via NCD as well as via QIP. So let's see what happens on that front. They had approved it some time back as well. So maybe this is probably just an enabling resolution they've taken, or maybe they would go ahead with some fundraising.
Okay, all right, Ekta. Thanks so much for that. Well, moving on then, Vedanta's Anil Agarwal is upbeat about investing in South Africa, even as the mining capital dries up due to regulatory uncertainties. In an exclusive conversation with Fifi Peters of CNBC Africa, he says he's bullish on Africa, despite the fact that many other investors are more cautious than optimistic. Let's listen in.
India, South Africa is a very good combination. It supplement each other. And that's why I'm moving cautiously, but I'm bullish.
Talking about that $100 billion, the Public Enterprises Minister Pravin Gordhan made a joke saying that would you be pledging some $99 billion of that? Could President Ramaphosa count on that from you? But sir, just your view on parting with your cash in South Africa at this time under this current business climate, would you be willing to do so?
We are looking every day. We are very pleased that we acquire Anglo Zinc, which nobody believed. We paid almost $1.7 billion for that. On top of it, we put in another $1 billion for doing the greenfield, because my Prime Minister Narendra Modi, when he came here, he was looking some of the Indian company to make investment. So we did that. Also, I got the opportunity to acquire 21% in Anglo, which cost me $4 to $5 billion. We invested that also. So, and you could see that everything what I'm doing in creating a huge shareholder value.
The Reserve Bank of India late on Friday announced it will purchase 10,000 crores of the Government of India bonds on various maturities from 2 years to 15 years. This is the first purchase announced by the Reserve Bank of India this financial year. Lata is here with more details on this. Lata?
Well, this is going to be seen as another attempt by the Reserve Bank to prop bond prices. As we know, from January, public sector banks have not been interested in buying these bonds. Well, it's partly because also bond prices are falling. There has been almost a secular rise in crude prices, and therefore, as well, it's not very profitable to buy bonds. But this is also because they were reprimanded for buying a lot of bonds. Since then, the government and RBI have done a lot to attract the banks back. If you remember, the borrowing calendar also was reduced for the current year. The amount of shorter maturities was increased. And then very recently, FPIs, foreign investments in bonds were increased. I mean, other encumbrances on them were removed. Now, this looks like the last salvo or another salvo from the Reserve Bank. There are others who say that it has got nothing to do with propping up bond prices. It's just because the Reserve Bank was selling dollars when there was this depreciation of the rupee to control that. And therefore, they were selling dollars, they had absorbed cash, and now, therefore, they're giving back that cash by purchasing bonds. So this is more liquidity management on the part of RBI. Be that as it may, today, 7.75 was the close on Friday. A 7.6 something on the 10-year bond is to be expected because they're buying a whole lot of maturities. It will be immediately NBFC positive, definitely, and of course, bond positive.
All right, Lata, thanks so much for that. Well, talking about banking stocks, well, Abhishek is standing by. That's going to be the big number today, ICICI Bank. Good morning, Abhishek. Fill us in. What do we expect?
Good morning, Nigel. So the key focus will be on the slippages. This time, the analysts expect ICICI Bank's results to be the worst in terms of quarterly performance. So they expect a slippage of between 10,000 to 15,000 crore. Now, last quarter, the slippages were close to 4,400 crore. Whether this slippages comes in from the known devil of watch list and restructured portfolio, watch list was at about 19,000 odd crores, and the restructured overall portfolio was at 14,400 crore. Then it will be positive, otherwise it will be negative. Remember that the bank had sold its stake in ICICI Securities for 3,500 crore, which will aid in providing cushion to the provisions or the credit cost for the current quarter. Management commentary on future outlook on their stress portfolio will be seen very closely. Expect the loan growth to be between 8 to 10%. Last quarter, it was at 10.5%. The low-cost deposit flow has been strong for other peers like SDFC and Axis, and ICICI Bank has it about 50.4% of the deposits in this low-cost deposit. So that momentum should be positive. Our polls suggest an NII decline of close to 1.7% on a YOY basis, while the bank can report a net loss of 13.3 crore as per our polls. Back to you.
Okay, all right, Abhishek. Thanks very much for that. That's on the ICICI Bank numbers, but there will be a lot of information that the street will be watching out for. Lata, what do you expect editorially?
No, I can't improve upon Abhishek's excellent analysis of what the street is expecting. But, you know, ultimately it is very much in the bank's hands how much to declare by way of loss. They can provide for more, they can provide for less. They can recognize a little less this time and a little more next quarter. So whether you report a loss or profit is something which the managements can have a lot of discretion over a couple of quarters. In the long run, of course, what is bad is bad. But today, there was a wild buzz in the market starting Friday evening that the Videocon coacher issue could be discussed. And therefore, you know, the extreme version of that rumor was that Ms. Kochhar could also resign. Now, this has an impact on what you expect today. If there is one section, look at the newspapers today. Economic Times says that it will not be discussed. Business Standard says it will be discussed. Times of India says it may be discussed. So I can tell you how many, all of us were working the phones to get, my own sources said that it is not going to come up. But nevertheless, for the market, it is important because if it is a question of resignation, then they will expect a kitchen sinking. If it is not a resignation and it's business as usual, then it will be a good result which will be spread over. So for the market, it is going to be tenterhooks today. I don't think anybody will want to take short or long positions.
Okay, all right, Lata. But we also understand that, in fact, the Power Ministry will meet RBI officials on May 8th with regard to the NPA circular.
Yeah, this is an important meeting tomorrow. At the, in New Delhi, which the Power Minister has been calling for some time. It could be a crucial meeting because the Reserve Bank's February 12th circular says that all loans over 2,000 crore which are stressed will have to be taken to the NCLT in 6 months. Of that, the bulk is going to be power companies, and that is why Power Ministry is most impacted. You know that he spoke to Anshu and also said that this is an unworkable circular, even called it nonsensical. So the things the Power Minister wants is that this one-day default should be extended to a resolution process kicking in after 30 days. They also want that you should be given 180 days and not just 365, should be given 365 days, or 1 year for resolution and not just 6 months as the RBI paper says. Among other things, they also want that there is, as of now, some of the schemes are already under resolution, under SDR, under, all those old schemes, S4A, 525. They want those to continue and be given time till September 30th. As the Reserve Bank circular said, all those processes end as of February, and you have to start a new process. They're saying those that are going on, let it go on till September 30th. The idea is that at least some will be saved. And then the Reserve Bank circular is actually silent on how many banks will have to agree to a resolution. So by default, everyone assumes all the banks will have to agree. The Power Ministry wants an explicit statement that if 75% agree for the resolution, it should go through. So these are the things that will be discussed tomorrow. It will be crucial because if the pressure is very high, there will be a small hope in the market that it will be tweaked. And of course, well-meaning people will hope that it will not be tweaked because it's for the good of the banking system.
Okay.
Now, let's talk about the commodity markets. Then Manisha Gupta joins in early this morning to fill us in. What's going on there? Hey, Manisha, good morning.
Hey, morning. And we have started yet another week with concerns on what really could happen with the Iran nuclear deal. As of now, there have been contradicting statements coming in from U.S., and that, of course, has been supportive. So we did see strong gains on Friday, and crude, even as slightly flat, is holding on to those kind of gains. The pressure, of course, continues from the fact that you have seen the U.S. rig count increase by 9 drilling rigs yet again. There have been statements on how the hedge funds have actually cut their net longs because they have been holding for a very long time, and we haven't seen crude crossing 75 on the higher side. And apart from that, there's an IEA statement which says that prior to 2014, while the U.S. crude output break-even was between $60 to $80, that has come considerably down to 25 to 40, and that tells you that the supplies will continue to increase from U.S., putting further pressure on prices.
Okay, all right, Manisha. Thanks very much for that. Well, Manglam now joins in to tell us what he's tracking from the F&O space. Manglam, morning.
Good morning, Ekta. So, as we start this week, it's an important one given the lead up to Karnataka Assembly elections. From a sentiment perspective, this is important. So, the one thing we'll be watching out for is the volatility index, because the India VIX, which started the series at around 12.4, which was among the lowest that we've seen in all of 2018, has now risen to about 13.3, and this is likely to increase in the lead up to Karnataka elections. So that is something we'll be watching out for. On Friday's trading session, well, the Nifty declined about 60 points. We saw the Nifty futures premium go back to that 41 points mark, the one that we saw on Monday's trading session as well. So keep an eye out on that. Perhaps there is some buying at lower levels, but definitely not buying coming in from the foreign institutional investors, because they sold about 500 crores in index futures on Friday's trading session. The long exposure at 56% is still higher as we speak, higher than the shorts at least as we speak. But ahead of the elections, ahead of the event, there is a lot of protection buying on the downside. So the FIIs, they bought about 1,000 crores in index options, adding a lot of long puts. In fact, all of last week, the FIIs added close to 36,000 long puts and unwound about 6,000 long calls. And as the volatility is expected to go higher, the proportion of shorts to longs is increasing. So a proportion of shorts to longs is actually decreasing. So that's something we'll watch out for. Markers placed at 11,000 call and 10,500 put. And Balrampur Chini, that is the one stock I'm watching out for, enters the F&O band. Keep an eye out on that one.